Our guest today at MoneyShow is Kelley Wright, income expert and editor of Investment Quality Trends. Thank you for joining us today.
Hey, thanks for having me.
Could you give us an overview of your investment strategy?
Yeah, we are very value-oriented. Our drink is stirred by dividends. We use dividends to find where value exists in a company. We have a very stringent criterion that is a qualitative filter that allows us to find stocks that we want to look at. And then once we find stocks that meet our qualitative criterion, we then take a look at them over like a 20-25 year basis at their dividend history. And the stocks that meet our criteria, Zach, what they tend to do is trade between two pretty distinct repetitive dividend yield areas. One where their price is low, one where their price is high. And at their low price, the dividend yield is high, and at the low price, the dividend yield is low. So those parameters help us establish what we call undervalue and overvalue, which is our buying discipline and our selling discipline. So that's how we find stocks, and then that's what we do to find out when they meet good value, and then we put them into the newsletter.
At the start of the year, you chose Phillip Morris International as your favorite stock for 2017. Since then, the shares have risen 33%. Could you explain the original rationale behind choosing this stock?
Sure. You know, when we put together, these stocks they're usually at the end of the previous year, going into the new year. You know, you never know what you're going to get from Mr. Market and from the economy, etc. So I was looking for a company that is very dependable and very consistent. And Phillip Morris is definitely one of those companies that fits that bill. Plus, internally, when you look at them, they're what we call their economic internals. They're just making a ton of money. They have phenomenal return on invested capital. They have great free cash flow yield. And the market never values them in a way that is inconsistent with their economic internals. So, well, you know, I took a look at that. I like the fact that, you know, Europe, where Phillip Morris is based out of, Phillip Morris International is based out of, you know, there was some money to be made in the exchange between dollars and euros, etc. And so that was really the rationale behind the pick.
Could you share an overview of developments at Phillip Morris since the start of the year?
You know what? They don't have a lot of development, Zach. They just do the same thing over and over and over, which is, you know, it's a tobacco company. It's not a difficult business. They always have a new batch of customers every year. And we have gotten some tailwinds, though, from the euro. And so it's just been a well-run company that has stayed very consistent, you know, with what they do and how they do it. And the market has recognized that they're very good at what they do. The market has recognized that they continue to generate tremendous amounts of cash flow, really great earnings, huge profits, and that's what's going on with the company.
Given the stock's strong performance so far this year, do you still recommend it as a buy?
No, it's a definite hold. I mean, if you don't own it, don't go buy it, because like you said, the shares are up 33% this year. When we first recommended it, it was in what we call our undervalued or buying area. But now it's well into what we call the rising trend. And so the rising trend is the hold area, and you've still got some significant upside left. But because you've got 33% downside, we wouldn't buy or add shares to it right now.
This is Zach Levine with MoneyShow, and we've been speaking with Kelley Wright, income expert and editor of Investment Quality Trends. Thank you for your time.
Zach, thanks for having me.